Hello everyone, great to have your company on Kalkine TV. I'm Sage and you're watching The Buzzing Trends. Today's star performer is Macquarie Group, and let us discuss how the banking sector player performed in the first half of financial year 2022. Financial institutions Commonwealth Bank and NAB were lower in the morning trade, with Macquarie in a trading halt ahead of its plans to raise $1.5 billion. Macquarie Group on Friday announced doubling of its profit in the first half of financial year 2022 to 2.04 billion Australian dollars. The investment bank also revealed its plans to raise 1.5 billion Australian dollars from institutional investors at 190 Australian dollars per share. Macquarie also offered a share purchase plan to retail investors of an unspecified size. And here are some highlights of the financial results. The first half net profit went up 107%. International income now represents 72% of total income, and assets under management are up 31% during the 6 months. CET1 Level 2 ratio of 11.7% and capital surplus of 8.4 billion Australian dollars. So what boosted the profit? The market-facing businesses under Macquarie Capital and most of its Commodities and Global Markets Group reported a combined net profit contribution up 118%. The annuity-style businesses under Macquarie Asset Management, Banking and Financial Services raised their net profit contribution 57%. The banking group announced that a massive 70% of its revenue can be attributed to international businesses. Additionally, the Green Investment Group subsidiary is expected to operate under Macquarie's Asset Management division from April next year. Macquarie cut its dividend payout ratio to 50% for an interim dividend of $2.72 Australian per share. It is more than double the $1.35 per share in the corresponding period last year. The bank's return on equity climbed to 17.8% versus 14.3% in 2021. Supporting its growth was the Macquarie Asset Management business, which delivered a net profit contribution of $1,305 million. Management advised that this was up 23% and driven largely by income related to the disposition of Macquarie Infrastructure Corporation assets. This was offset partially by lower performance fees. The Banking and Financial Services business delivered a net profit contribution of $482 million for the half, up 52% on the prior corresponding period. This reflects strong home loan, business lending, platforms and deposits growth, as well as lower credit impairment charges. Partially offsetting this was an increased headcount and investment in technology to support growth. The Commodities and Global Markets business was a strong performer during the half. It delivered a net profit contribution of $1,729 million, up 60% on the prior corresponding period. This was driven by increased revenue across commodities, with strong risk management income from gas and power, resources and agriculture. The result also benefited from the partial sale of the UK Meters portfolio of assets in May. Commenting on the results, Macquarie's Managing Director and Chief Executive Officer Shamara Wickramanayake said that this first half saw a significant increase in net profit contribution from all 4 operating groups compared with the first half of financial year 21, a period which was affected by the COVID-19 pandemic. Given this positive highlight, Macquarie is looking to raise more than 1.5 billion Australian dollars in equity to promote investment in business opportunities. The investment bank would look at investments from institutional investors through a placement, and it also has plans to launch a share purchase plan, allowing retail investors to invest in the company as well. Macquarie provided no guidance for the remainder of financial year 22, even as it was cautiously optimistic on the future. MD and CEO Wickramanayake said that Macquarie remains well positioned to deliver superior performance in the medium term. And this is due to their deep expertise in major markets, strength in business and geographic diversity, and ability to adapt the portfolio mix to changing market conditions. The reason the Macquarie share price is in a trading halt today is that it is undertaking a non-underwritten institutional placement aiming to raise approximately $1.5 billion. These funds will be raised via a book build process commencing at $190 per share. This represents a 4% discount to the Macquarie share price at Thursday's close. And thanks for joining us on the report. That's all for now. We will be back soon with our Buzzing Trends show to share the latest market insights with you. Until then, stay tuned with Kalkine TV for more of the stock, business and economy related hot trends. Sage signing off.